Hi, I'm Rob Thomson, Assistant Commissioner with the ATO and the ATO's Tax Time spokesperson.
Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
Hello and welcome to the Australian Finance Podcast. I'm your host, Kate Campbell, and today we are talking tax. I have the Assistant Commissioner from the Australian Taxation Office, or the ATO as we all know it, Rob Thomson. Welcome to the episode.
Thanks, Kate. Thanks for having me.
Thank you for coming into our studio in Melbourne as well.
Not a problem. Any chance to come to Melbourne and get some good coffee? I know that's, there's a bit of a conjecture around who's got better coffee, Sydney or Melbourne, but, I think Melbourne's probably better.
I think Owen and I will both say Melbourne. We've been to Sydney quite a few times, but that's all right. So we're going to talk about everyone's favourite topic, tax, today. Yep. We're going to cover a lot of the basics that people need to know. Of course, it is a super individual thing that everyone will have different circumstances, which is why it's good to talk to a tax agent who knows what they're doing. But we'll just cover some of the basic playing field so people know what questions they need to ask, what things they might need to consider, what to research.
Sure. Sounds good.
So I guess to kick us off, did you always dream of working in tax?
No, I didn't. I dreamed of being a drummer, but I was never good enough. So, I had to find another career. But being at the tax office for 14 years and have really enjoyed it, and I think plays a really important role in the Australian system.
And just to give us a holistic idea, I'm sure everyone is familiar with the ATO, but what is the role of the ATO? What does it do apart from the place where we have to submit our tax returns?
Good question. So the ATO, its role is to administer the tax and superannuation system. And a lot of people just engage with us at tax time, but actually we have a lot broader range. For example, a super guarantee, we collect that and make sure that goes into people's super funds. So, we administer the self-managed super funds. So there's actually a range of things that we do outside of just tax time. But tax time is obviously very important. And for the majority of individuals, is probably the one time of the year that they engage with us. But we also do offer a lot of services year-round, so if people are having questions or need to engage with us on their tax, they can.
Because there's a lot of educational materials. I know there's tax guides for individuals, there's tax help for lower income earners. There's a lot of support services available that people can get lots of information and so many examples as well.
That's right. And so we also updated our website this year to make it easier for people. But we definitely want to make sure that people understand and have a level of education when it comes to tax and can get the help they want. We want people to lodge their tax return and get it right the first time and then not have to worry about it for the rest of the year for most people, other than making sure they get their records during the year. But, so there is a lot of help, and we're just trying to make sure that we educate people so they understand what their tax obligations are, and then that makes it easier for them at tax time.
Now, a lot of people put their taxes at the bottom of their priority list. They don't really want to engage. It seems like it's such a hassle. Why do you think it's so important that we all understand what our obligations are?
So I think a few things. One, I think at the core, tax pays for really important community services. And so, education, welfare, healthcare, a range of services that are important for all Australians. So I think at its core, taxation is important and people meeting their tax obligations is important because as Australians and to live in a society, we all have an obligation to pay for those services. I think understanding the tax basics and the tax system in terms of financial literacy is just good for people, broader in terms of financial literacy, especially those, the sole traders or running their own business. But just generally, I think having a good level of financial literacy is kind of key. And I think the third thing is if you understand your tax, you understand the basics, then when you lodge your tax return, it's just a little less stress. And I don't know about you, but I've got enough other stresses in my life that if I can take one away, I know I've done something, I've ticked it off the list, I know I'm right, I know I've probably got it right, I don't have to worry about that till next year again, then I think that's just in today's society one less stress that you have, right? So I think those are the reasons why understanding tax basics is really important.
And that's a good thing. When you learn about the basics, most of them stay the same each year. Sure, what you can claim might be a bit different or the thresholds might be a bit different, but the big concepts remain the same, don't they?
That's correct. And that's why we're really focused on ensuring that we educate people and spending a lot of time on education and support so that people can understand their obligations, understand what they can and cannot claim, and then when they do their tax return, it's just a lot smoother for them.
And we all want our lives, especially our financial lives, to be a little bit simpler, which is why most people are listening to the podcast. Now, if you are a do-it-yourselfer and you have done that for years with your taxes, when might you consider using a tax agent? Because I personally use a tax agent because life's already complicated enough. I just want to get it right and I don't want to have to spend 20 hours trying to figure everything out.
So it's an individual choice for people, whether they want to do it themselves or whether they want to use a tax agent. What we'd say is we've tried to make it easy as possible for people that do want to do it themselves to be able to lodge online. And so we pre-fill a lot of the data into the return that we get so that when people go online to lodge themselves, all of that's available for them. What we say on that is wait until the end of July because that's when it's all in. But, if you wait until the end of July, all that information is pre-filled for you and you can do it. If you have more complex tax affairs, then you might want to engage a registered tax agent to help you with your tax obligations. All that pre-filled data is also available to your tax agent. But, that's a question for you depending on the complexity of your own circumstances. I think what we'd say there is if you are considering engaging a registered tax agent, a few things to remember. One is you still need to have all your records. So whether you're lodging yourself or you're lodging through a tax agent, you need to have all your records. You need to take them to the tax agent when it's time to
And that often makes it cheaper for you as well because the accountant isn't having to spend as many hours chasing you.
That's right. Look, and if you've been using the same tax agent for a few years, have a chat with them around actually how they want the record structured, especially around your investments, and that can make it easier for them and for you. The second is that same pre-filled information is also that is available if you do it yourself, is also available for the tax agent. So once again, waiting till July, can help your tax agent also remind you perhaps of some income you've forgotten. And the third bit is if you are using a registered tax agent, have a look on the tax practitioners board website to make sure that they're a registered tax agent, because that means that you're getting good, proper advice from a registered tax agent who can help you with your obligations. But once again, personal choice. A lot of it comes down to the complexity of your own tax affairs.
It does make it a lot easier for individuals now because of all that information being pre-filled. So like if I am getting bank interest from ING, that's often automatically reported and popping up in my pre-filled information.
That's right. And I mean, as we said before, we're all busy, right? So sometimes you get to tax time, you might have forgotten about some income you've got during the year, or for people if they're working 2 or 3 jobs and they might have done some casual work for something, all of that's in there. And so you can just remind people of all the income that they've actually got during the year and then think about what deductions they can claim against that income.
What if you get really excited, submit your tax return in August, and then realize in September when you get another statement that you forgot to include some source of income during the year or something like that?
So that's fine. Mistakes happen. We all make mistakes. So a few things there. If you have made a mistake, you can make an amendment through our online services, and you can do that either yourself or through a registered tax agent. What we'd say, though, is wait until your original tax returns processed. So if you've put in a tax return, you've hit submit, and you've gone, oh, no, I forgot something, whether that's income or a deduction, just wait until that's processed and then put the amendment in. And then, I think the other thing as well is you can actually check the progress of that return through the ATO's online services, so either through the ATO app or through MyGov. And so you can check how your original return's going. Once that's processed, then you can do the amendment.
Because it's pretty quick these days. I think for most individuals, friends and family I was speaking to, things were happening within a week or 2.
So yeah, normally for most it's within a few weeks. Sometimes, our systems might also identify that you've missed something, and so when that happens, we will stop your return and give you a call and ask you some questions. Lodging in the first few weeks or before the middle of July or end of July actually doubles your chances of us stopping your tax return and asking you some questions, because that's typically when people forget something because they haven't waited for the pre-fill information to come through.
Now, you mentioned the ATO giving you a call. We've all had those ATO scam calls that have come through, or those texts. How do we check it's a legitimate call?
Definitely a good question. Look, I've even had someone pretending to be the ATO call me and tell me they're going to put me in jail, which I kind of probably told them I think probably not. But, they are out there. So if you legitimately think it's a scam, first thing is think about if you've given any of your personal information away. If you've given your bank details away, first thing you do is call your financial institution and put a hold on all your bank accounts, then call the ATO. Now, if you think it's a scam, you can call us on 1-800-008-540 and they will be able to tell you whether you've spoken to someone that's from the tax office or you're speaking to someone that's not from the tax office. If you get an email, you can email us at reportscams@ato.gov.au. But, I just think about, does this look right? This is why we also encourage people to link their ATO online services to their MyGov, because then that's a way that we'll use to communicate with you as well. But if you do get a call and you think it's suspicious, look, just hang up and call us back.
Yeah, it's probably something that you do want to just double check and make sure you are speaking to the proper place.
That's correct.
Now, if we're talking a little bit about our personal income and what we need to include this year, what are some of the main things that people should be considering when they're going, okay, what income? Because a lot of us do earn a bit of money on the side, not just from our normal 9 to 5.
Yep. So you need to remember to include all your income this year in your return. So that's whether you've earned it from jobs, whether that's full-time, part-time, casual, this all needs to be included, including if you've been paid in cash, but also other money that you might have received. So, if you've done crowdfunding, you've got a side hustle, sharing economy, content creation, if you've earned income from that, foreign income, some government payments are taxable, and obviously all your investment income. So you really need to think about all the sources that you've had during the year and make sure that you've put those in your tax return. This is why we're kind of telling people, again, not to lodge too early, because then we'll kind of provide those reminders a lot of the times for people. And so they'll get the information. They just need to check that it's correct, check that nothing's been missed, and then can submit it. And so once again, this is why we're saying, just wait till late July. It's not a race. It's better to get it right the first time, not worry about any mistakes, and then you're good to go.
This probably comes back to the keeping good records, because a lot more of us are earning different money from different income sources. Maybe we had one casual job for a few days and we got some income from somewhere. So we have to remember all these different places of income.
That's right. And that's why we're saying good records during the year are key. Even though you might only have to engage with us at tax time, keeping good records are key throughout the whole year. Makes it easier at tax time, and also just waiting for the pre-fill information makes it easier as well.
Yeah. And I guess if you mentioned earning money in cash, that probably doesn't get pre-filled.
No, that's correct.
Something you probably...
No. Some sources of your income will be pre-filled, others won't. But, that's, again, just about your obligations to make sure that you've included everything.
What about on the deduction side? What are some of the common things that we should be considering as individuals in our tax return?
So work-related expenses continue to be the largest or the bulk of deductions we see for individuals. And they include things like your car expenses, your working from home expenses, clothing and laundry, self-education, travel. So there's a range of expenses that we see there. But there's really 3 golden rules that you need to remember if you're thinking about claiming a work-related expense. The first is that you have to have paid for it yourself and not been reimbursed. The second is that it needs to directly relate to the income that you're earning that's in your tax return. And the third is that you need to have a record of that, and typically that's in the form of a receipt. So that's things to remember. But there are other types of expenses that you can actually claim your tax return. So if you've made voluntary super contributions through the year, you can claim those. If you have made a gift or donation and you've made it to a deductible gift recipient, then you can claim that. And also the costs of managing your tax affairs. So as we talked about before, if you are engaging an agent, then the amount that you've paid that agent to manage your tax affairs, to lodge your tax return, in August this year, is kind of then in your next tax return, you can claim that as well. But once again, this is why having receipts and keeping good receipts and collating them through the year just makes this easier then when you get to tax time to make sure that you can claim everything that you are entitled to claim, because we do want to see people claim what they're entitled to. Obviously no more, but no less also.
Yeah, so people shouldn't feel bad for making claims for deductions and things like that?
No, they're legally entitled to. So, they should definitely be able to claim. They should definitely claim what they are allowed to. But once again, it's about having good records.
And that's one of the benefits of using a tax agent. They'll often prompt you because if they know you work in XYZ profession, there's often common claims in that profession. So they might actually say, did you have any of these expenses that you can tell me about this year?
That's right. And we also have on the ATO website, we have 40 industry or work-related guides as well. So you can have a look at those. And for your industry, there's ones like tradies, chefs, teachers. For those, they'll actually tell you what you can and cannot claim. So you can actually have a look at that, and that can actually help you to understand the receipts that you need to keep during the year. And obviously also a plug for the ATO app. So our ATO app has a My Deductions tool where you can actually take photos of the receipts, and then you can share them with your tax agent at tax time as well.
Because the worst thing is when you've left the Officeworks receipt out in the sun and it's faded over 12 months. And
yeah. For some reason, taxi receipts always do that, right? Like, I don't know what it is. It must be the paper they use.
Not strong black ink, I don't know. And what about working from home? So that's something that most of us experience at some point at the moment. Maybe it's a day a week, maybe it's 5 days a week we're working from home. What are the deductions available there?
Sure. So, I don't think working from home is going away anytime soon, right? So there's two methods you can use. There's the fixed rate method or there's the actual cost method. So under the fixed rate method, you can claim a set amount, which for the 23-24 income tax year is 67 cents per hour you work from home, and you can claim that for every hour you work from home. And that includes so it's an all-inclusive method. So it includes some of those things that are a little bit hard to apportion, like your phone and your internet. So that's one method you can use. The other method you can use is the actual cost method. And so that's where you claim the actual costs that you've incurred for working from home throughout the year. Now, with that one, for each type of cost that you are claiming, you do need to be able to have records that show, the amount that relates to the work-related expense. And so really it's up to people as to which method they want to use, whichever gives them the best result. And, there's obviously a bit of a record-keeping difference. So whichever one they want to think about in terms of record-keeping as well.
So you have to show how much time you were using the internet for work versus Netflix and things like that.
Yeah. You've got to think of a reasonable basis to apportion it. So if we talk a little bit about the records that you'll need to claim for working from home, if we talk about the fixed rate method, really there's two things you need to do. One is you need to record the hours for the whole year that you've worked at home. Now, this can be a spreadsheet, it can be your diary, it can be your work timesheets if they kind of indicate when you're working from home, but you need to be able to demonstrate the hours you've actually worked from home. And then you need to keep examples of receipts like your phone and your internet. So that's for the fixed rate method. For the actual cost method, then you do need to keep receipts for each expense that you're looking to claim a working from home related proportion of that. And those receipts need to have the supplier name, the cost, the date, and then you need within your records to be able to show how you've apportioned that between any domestic use or personal use and the work-related expense. There's a bit of information on our website around some of the ways you can calculate that. And now for that, you also need to obviously demonstrate how much of the time you've worked from home, right? So there's two ways you can do that. Once again, you can keep a record for the whole year like you do for the fixed rate method, or you can do a 4-week representative sample that's kind of representative of your normal working pattern through the year. Up to you which method you use. It's totally up to people, whichever gives them the best result. As long as they've kept the records to be able to substantiate that, then it's their choice.
Would that record be something like my Google Calendar, which has where I am on different days and what I'm doing?
It can be if it shows the actual hours you started and finished working. So if it's just got, I've got a meeting here and I've got a meeting there and I was at home, but it needs to have a start and an end time because obviously we're calculating it on a per hour basis. So if someone comes along and asks you to substantiate how much of the time that you've spent working at home during the year, you'll need to know the start and the end dates. And obviously if you're taking time for lunch or, you've got to do an appointment in the middle of the day and run out for work for a few hours, you need to kind of make sure that that's captured as well.
Yeah, because I'm just thinking people probably don't write down every day of what they're doing and how many hours they're at home and in the office. They probably just have it in a calendar or something like that.
And that could be correct. And then they just think about how they can add to that calendar or how they can record it on a spreadsheet just to make sure that that's kind of all there.
Okay. And that's just if it's requested.
Well, So they need to be able to, you need those records then because you'll need to work out how many hours you worked at home to then calculate those total hours times the 67 cents per hour. So you do need to be able to substantiate that when you put your tax return in. Obviously, if the ATO comes and asks for it, you need to be able to provide it, but you'll actually need those records to be able to calculate the actual amount of the expense you can claim for your working from home deduction. Now, that's whether that's under the fixed rate method, but also you'll need those hours when determining kind of how you've apportioned and calculated under the actual cost method as well.
Okay. And what about office equipment?
So office equipment, if it's more than $300, then you can claim the decline in value for that office equipment over a period of time. So if it's under $300, you can claim an immediate deduction where it's not part of a set. But if it's like you've bought a new computer and it's a few $1,000s, or you've bought a new desk and it's $500-$600, then you have to claim the decline in value of that over a period of time. And there's information on the ATO website around the asset lives of some of those products.
Okay. So my chair could decline in value.
It could. And once again, things have different effective lives, right? So, some of your furniture is probably going to last a little bit longer than perhaps your computer.
Yeah. They don't last very long these days. All right. Okay, so we've covered working from home, we've covered our personal deductions, we've covered personal income. What about the Medicare levy? What do we have to pay there and what do we have to consider?
So the Medicare levy is a levy that most Australians pay, and it's calculated through their tax return, and it's to help fund the Australian healthcare system. And so that's generally 2% of your taxable income. However, some people don't need to pay the full amount or may be exempt. And so, for example, you might be exempt where you're a low income earner, but the amount of your reduction in your Medicare levy will depend on the income you're earning, also depends on your family circumstances, and for as well some of the thresholds change, for example, for if you're receiving the senior and pensioner tax offset. So really we'll calculate the Medicare levy reduction and work it out for you, but it's really about you providing us the information in your tax return that then allows us to be able to calculate that.
So if you've provided all of the income details correctly, the Medicare levy will be calculated automatically for you?
Yes, except in certain circumstances where you're entitled to the Medicare levy exemption. So there's a few circumstances where you actually don't need to pay the Medicare levy exemption. So we'll need to consider your circumstances when you lodge, but also you'll need to let us know. So you might be able to claim a full or a partial exemption if you meet certain medical conditions and circumstances during the financial year. For example, one's veteran gold card holders, but also if you've been a foreign resident for tax purposes for part of the full income year, then you might be entitled to a reduction or an exemption in the Medicare levy, and also for temporary residents. So if you're not entitled to Medicare benefits because you're a temporary resident, you may also be able to claim the Medicare levy exemption, but your spouse and your dependents also need to be able to claim the Medicare exemption. And if you are a temporary resident, then you actually do need to apply to Services Australia for a Medicare entitlement statement. And you can apply for that through Services Australia, either through MyGov account or using their online application form from 1 July. So if you are a temporary resident and you can apply for that, just a reminder though, it does take Services Australia a little while to process them. So, don't think, I'm going to lodge on 30 August and I'm going to apply to Services Australia on the 21st. So make sure if you are entitled to get a Medicare entitlement statement that you do that early at tax time, and then you'll have plenty of time to get that before you lodge your tax return.
I presume you have a guide on the website of who gets exemptions for this and
we
things
do,
like that?
We do. Lots of information on the website, including how you can apply to Services Australia.
All right. So most of our listeners are investors, whether that's in property or shares or ETFs, or maybe they've just tried a micro-investing app. What are some of your tax tips for people who do have investments in shares and ETFs? What do we need to know here?
So it's important to check the pre-fill income that I talked about earlier for dividends against your own records. So we do get a fair bit of data that's at our disposal that we obviously try to pre-fill into the return. But But we also get other data that might also identify when you might actually also have a capital gains tax consequence. So when CGT or capital gains tax occurs, you need to calculate the capital gains tax or loss and put that in your tax return. So for shares, it's important when you are calculating your capital gains tax or loss not to forget to include your brokerage fees or any other kind of amounts that you've had, to put them in the cost base when you're working out your capital gain. So that can be anything else, that kind of any other costs you've had from owning those shares. ETFs are similar, but instead you're sent what's called a standard distribution statement, and that actually breaks down the amounts of the income you get, and it tells you where you need to put them in your tax return. So it's a bit easier for those people. Also, then when you dispose of the units, the statement will also show you the capital gain or loss that you need to include in your tax return. Don't forget, if you do end up with a net capital loss, it is important that you include that in your tax return in the year in which you have that loss, because then you can actually claim that in the future tax returns against any capital gain that you have. So whether it's a gain or loss for capital gains, make sure that you do include it in your tax return.
The statements for ETFs can sometimes be a little bit more complicated. I mean, that's one of the reasons that I've used an accountant in the past, was just all the little different sections, because often it can be made up of income and capital gains and other different pieces of information. So I guess with the pre-fill now, that makes it a little bit easier.
It can, but this is again, it's a question for people around how comfortable they are around looking at the standard distribution statement and then putting that into their tax return themselves versus seeking some kind of advice from tax agents. Also some information on our website, obviously, around how to fill that section out. But once again, that's a personal choice for people, depending on kind of the complexity of their kind of tax affairs and how comfortable they are doing that themselves versus how much they want a bit of assistance with that.
We often have to break it to people on this show that even if they had a dividend or a distribution reinvestment plan turned on for some of their investments, they still have to pay income tax on that. It's not a magic bullet.
That's right. Also, I know a lot of people get, also if you're getting shares or options through employee share schemes, then there's a lot of information on our website to help you work out the tax consequences of that as well.
And what about the capital gains tax discount?
So there is a capital gains tax discount that is available for individuals where they've held the asset for more than 12 months. Once again, have a look on our website. We've got a lot of information in our investor toolkit. We've updated the investor toolkit this year to include 15 or 14 new fact sheets. The exact number I can't remember, but a number. And so do have a look at our investor toolkit if you are disposing of something. It tells you how, the tax consequences, and there's also a lot of information around how to calculate your capital gain and what goes into your cost base, because there is a number of elements that go in your cost base. You want to make sure that you are claiming everything you're entitled to and working out your capital gain or loss.
And that's also something often new investors aren't aware of, those things like the capital gains tax discount. So it's worth finding that out because it may improve what you're reporting.
It can. And so what we tell people as well is if you are thinking about making large investments, it's the first time you've done it, definitely worth having a look at the ATO website or seeking some advice from a registered tax professional so you understand both the short-term and long-term tax consequences of the investment that you're making, as well as you understand the record keeping that's required. Because some of those records, some things you might pay for at the start only become into play when you dispose of it. And so you might keep those records for a period of time. And so it's keen to make sure that you've got all that set up well at the start.
Yeah. And some tools that our community use are ShareSite and Avexa, or even just Google Sheets to keep records of this, because if you are investing in a few different things, few different shares and ETFs, it can become a little bit more complicated. So you do want to keep track of this as easily as possible. Now, if we talk about rental properties, what are some of the high-level things that people should be aware at and look more into for these?
Sure. So there's a few areas that we see common mistakes being made by rental property owners. So one of them is borrowing expenses. So people think things like lending charges can be automatically deducted. Valuation fees can be deducted in the year you incur them. But for a lot of them, you've got to claim them over 5 years because they're considered a borrowing expense. So you do need to claim those over a period of time rather than an immediate deduction. The second area is interest expense. So, you need to apportion any loan, any interest on any loan between the part of the loan that's being used to generate the investment income or to fund the investment asset versus that you might use for personal use. So we see sometimes people forget to apportion, or they think that, well, I took out a loan for 500,000, I used 50 grand to buy the car, I've paid the first 50 grand off, I'm good. The rest is for the property. It's actually the apportionment has to occur for the whole life of the loan. So that's another area we see. And then the third area is we see a lot of, I think, common mistakes or confusion just when it comes to repairs and maintenance. So we see people incorrectly claim things as repairs in the year where they think they've repaired it, when actually it should be considered a capital work. And so that's then claimed over a longer period of time. And so they really need to think about, are they just repairing it back to its basic functionality, or are they actually improving it? Because that changes the tax consequences and the timing of that. The second bit is initial repairs that are done to fix damage when you purchase the property, whether you're aware of it or not, is actually not a repair in the normal sense that you can claim an immediate deduction. You actually have to portion that over a period of time because it's considered a capital work. So once again, having a look at the ATO's investment toolkit and the information we've got on property investment can really help people to understand whether something's a repair, an initial repair, capital works, because it can get a little bit confusing. Once again, also it can be worth talking to a registered tax agent. They can help you with this. But once again, I think as we've talked about a little bit, having records, setting those records up from the start is a really good way of then making sure that you are claiming what you're allowed to in each year. So that's the best way to go.
I've never had a rental property, so I'm not familiar with all the different tax things there, but it does sound like there's a few things to be aware of, especially entering into it. So I feel like if I ever did this, I would probably want to know all of the different things you can claim, what records you need to keep beforehand. That's
right. And that's why, a fair bit of complexity at times for people to think through. And that's why, having a look at the ATO website or speaking to a registered tax agent, even before you're thinking about making that investment, can help you to understand all the tax consequences, but then also the obligations that come along with that. Because it's quite different to just owning a primary residence. There's a lot of different factors you need to consider there. There is. Do you want to talk a little bit about crypto? I know it's not the flavour of the month, but are there any things we need to be aware of there if we do have crypto that we've bought years ago and we're finally trying to figure out what to do with it? Sure. So a few things that I think really stand out when it comes to crypto. One is that research, and this is really one of the big things is around records. So research has shown that over 30% of people that have invested with crypto haven't kept records. Now that makes it really difficult when it comes to kind of then disposing of the crypto and working out the tax consequences. At a minimum, they need to know the time, the date, the amount of crypto, along with, any expenses or legal costs that they've incurred in managing their crypto assets. So, they're the basics they need to have. What we would also say is set reminders to export your transaction history every few months can be a way of ensuring you're setting a good method to make sure that you've got it, but also especially before you're closing any crypto accounts, make sure that you've exported the transaction data. It can make it easier. There's also a myth out there that, crypto is a bit anonymous. It's not. We have extended our crypto matching program. And this is one way that we're identifying people where they've probably had a transaction in crypto and they need to make us aware of it. Also, when it comes to gambling, you do need, using crypto for gambling, you do need to report a capital gain. Now, this will depend on why you originally acquired and held the crypto, but this also includes even when you lose the bet. So you need to think about the tax consequences. And if you've made gambling winnings, and then you eventually dispose of the crypto, you may still need to declare a capital gain. So I think what we're saying is anytime you dispose of crypto, or including in gambling, or or it's kind of swapped or shared, you need to think about the CGT, capital gains tax consequences of that.
Because you get data sent to you from all the Australian crypto providers, don't you?
So we do get a lot of data from some of the exchanges. So we are able to use that to then be able to identify where people potentially have disposed of some crypto over the year and just ask them, hey, don't forget to lodge this in their tax return.
Well, something to be aware of if that's relevant to anyone. For new investors, we've talked a little bit about record keeping, but do you have any other tips there to make our lives easier?
So I think remembering that investments are usually just for the long-term gain, so for wealth creation. And so really setting up good record keeping at the start, given some of those records that you get at the start really only come into play when you dispose of the asset. So I'm not saying you're going to spend big bucks on the latest software. It's up to you how you keep those records. As long as you have set up a good system for record keeping, if you are using a registered tax agent, you may want to speak to them about how they like to see their records set up. That can help you set up a good structure. The other thing is there's obviously apps out there to help. Obviously, some of the brokers that you're investing in may offer these services to you. I think if you are just thinking about using an app or a broker, etc., depending on the type of investment, just check whether that's free or whether you do actually have to pay some money. But, once again, good records are key. And as I said, it's worth chatting to your tax agent if you're using one about how they like to see them set up. That can just make it easier at tax time for everyone.
It is, I think, still important to keep your own records because often the broker will just show you the average cost base for your purchase, and that doesn't break down all the individual purchases you've made over the years, because many of our investors that are listening are investing for a 10 plus year time frame, and they're making regular monthly or 6 monthly investments into particular ETFs and shares. So they're going to have a lot of records at the end of the day.
That's right. So once again, I think that's just about having a look at the investor toolkit, seeking advice from a registered tax agent around what you need to make sure that you hang on to for the life of that investment, and then thinking about how you want to structure your records and what's best for you. Whether that's spreadsheet, people have gone away from, the good old shoebox under the bed, but, whatever.
I wouldn't recommend that. It makes life harder.
Whatever works, it's people's personal choice. All we're saying is, at the end of the day, make sure you've got the records.
Now, if people are doing their tax return for the first time as investors, what are some helpful resources that you would want them to have a look at on the ATO website?
We have a range of helpful resources on the ATO website, and actually some of them are linked when you lodge your tax returns. They'll come up. So that's really helpful if you're doing it yourself. But there are a range of videos, step-by-step instructions, online tools, calculators, and PDF fact sheets. So, thanks for including them in the show notes. And because we've been talking to a lot of investors, we just refer people to our investor toolkit. Is a really good place to get a lot of information around the tax consequences if you're thinking about investing or you need to work out your tax obligations for this tax time.
Yeah, there'll be plenty of different links in the show notes. Now, we covered a lot of different things in this conversation to give everyone a high-level understanding of what they need to think about this tax time. But what's the number one thing you want listeners to take away?
So I'm probably never really good at following instructions. So I've probably got 3 takeaways. One is it can actually be relatively easy to lodge your own tax return. But if you're doing that, make sure you wait until after July. The second is if you're claiming any deductions, make sure you keep good records. That's whether you're doing it yourself or you're lodging through a tax agent. And the third one is to think about this, make sure you're setting up a good system for keeping your records throughout the whole year. So that'd probably be, that's not one takeaway, that's 3, probably a little bit cheeky, but they're probably the 3 things that we just like the listeners to make sure that they kind of take away from this.
Wonderful. Well, we'll have heaps of links in the show notes so people can learn as much as possible and really understand what they can claim, what they need to declare so that they can have everything done and make their life as simple as possible. Rob, thank you so much for coming down from the ATO to chat with us today.
Thanks for having me.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.